Hi there, this is Darlene. Today I'm going to be talking to you about the relative strength index and the moving average systems and how these can be used in conjunction with our EA. So, first of all, let's talk about relative strength. What is it? Well, the relative strength index measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as a line graph that moves between two extremes and can have a reading from 0 to 100. Traditional interpretations and usage of the RSI are that values of 70 or above indicate that a security is becoming overbought or overvalued and may be prime for a trend reversal or corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. This is also a lot like supply and demand, or rather, basically supply and demand, but I'll explain that further. So let's have a look at this snippet out of this, okay?
Relative strength. The relative strength value is then plotted on a graph between 0 and 100. Plotting a line helps investors measure momentum in relative terms, which means looking at the indicator's current value in relation to past values. This comparison may make it easier to identify when a stock might reverse its prevailing trend. To identify potential trend changes, there are two ranges of the indicator to keep in mind: overbought and oversold. Overbought refers to a stock that has increased rapidly in a short period of time and may reverse lower. Conversely, oversold refers to a stock that has decreased sharply in a short period of time and may reverse higher. Now that you know how to calculate RSI and how it measures momentum, let's look at how investors might use this indicator to identify potential trading signals. Some investors define oversold as an RSI value below 30. When RSI crosses back above 30, it generates what some tech traders generally see as a potential bullish entry signal. Exit signals work the same way, except investors use overbought values. Technical traders view an RSI value above 70 as overbought. When RSI crosses back below 70, technicians typically see it as a potential exit signal. Now that you've learned how tech traders might use RSI to determine trading signals, let's discuss how the indicator can be used to spot potential trend reversals. A trend reversal may be confirmed by the RSI when it shows a divergence. A divergence occurs when a stock's price moves one way and RSI moves in the opposite direction. For example, a bullish divergence occurs when a stock makes lower lows, but RSI makes higher lows. This can be a signal that downward momentum is waning and a bullish reversal may follow. After identifying a bullish divergence, an investor might use a crossback above 30 as an entry signal. A bearish divergence occurs when a stock shows higher highs, but RSI shows lower highs. This can be a sign that upward momentum is slowing and a bearish reversal may occur. After spotting a bearish divergence, an investor might use a crossback below 70 as an exit signal. Using RSI to spot divergences and identify potential oversold and overbought conditions can help investors find potential trading signals. However, this doesn't mean using RSI is foolproof. One of the main risks of using RSI is that signals aren't always accurate. This is because RSI can't factor in events that influence a stock's price, such as economic news, earnings, and other fundamental aspects. Additionally, RSI can remain overbought or oversold for long periods of time. So even if a divergence suggests that a stock might move a certain direction, there's no guarantee. Reading RSI also requires subjectivity that benefits from hindsight. For this reason, RSI is usually used in conjunction with other forms of confirmation, such as volume and the overall trend in the broader stock market. Even if RSI is imperfect, investors who incorporate the indicator into their trading may find the insights and context it provides to be useful.
Okay, so that was the relative strength index. I had to watch that video a few times, and as I said, it's listed in the description, so I would suggest that you might want to do that as well to fully understand it. It's not that hard. It's once you do get it, you got it. It's no problem at all. Okay, so this is on relative strength index. And by the way, in case I haven't mentioned this already, this video is strictly for entertainment and educational purposes. This is not meant to tell you how to trade in any way, shape, or form. Okay, now that we got that out of the way. So the relative strength index, and I'll show you how to put that onto a chart as well. Now, moving on, we'll be doing the moving averages.
Technical analysts
Stop that. Moving average. So what's a moving average? The moving average is a simple technical analysis tool that smooths out the price data by creating a constantly updated average price. Moving average is a simple technical analysis tool. Moving averages are usually calculated to identify the trend direction of a stock or to determine its support and resistance levels. See, this is another place where support and resistance or supply and demand comes into play here. Sorry, I lost my spot here. It's a trend following or lagging indicator because it's based on past prices. If we could, if we could forecast the future, we'd all be millionaires. So the shorter the time span used to create the average, the more sensitive it will be to price changes. The longer the time span, the less sensitive the average will be. And I will show you how to set up these time spans on your chart, as well as the RSI and the volume. Okay, so let's go to my notes here. Here is, I'm just giving you portions from these videos. You really should listen. You should really go through them all yourself, okay? And this one's only 4 minutes, 40 seconds, so they're very short.
A 20-day moving average can help determine short-term uptrends, downtrends, and sideways trends. Examining a security's moving average in relation to its current price can help investors identify potential buy signals. For example, when a price breaks above an upwardly sloping moving average, this could mean it's a good time to buy a stock. Another buy signal could be a support bounce. This is when the security's moving average acts as a support level for the price. When the price comes down to the moving average and then rallies up again, this bounce could be used as a buy signal. On the flip side, moving averages can also help investors know when to sell a position. For example, if the stock's price rises to the moving average and bounces, this might be a sell signal. Looking at a simple moving average over a short-term time frame can be very helpful, but it has its drawbacks. One thing to be aware of is whipsaws. A whipsaw is when the stock is. The main disadvantage of any simple moving average is that they're slow to reflect price changes. Because each period is given equal weight, day 50 counts as much as day 1. As you can see, a large gain or drop hardly factors into a moving average for some time. This is known as lag. Let's look at an example to illustrate this. If you use a simple moving average for buy and sell signals, your stock could experience a huge pullback well before the simple average reflects this activity. To avoid lag, consider using another analysis, such as a weighted moving average or exponential moving average. These types of moving averages consider recent data the most relevant and give it more weight. Consequently, these types of moving average lines react quickly to the security's price changes. This is helpful for active traders who want to place short-term trades. It's also important to note that moving averages don't predict future performance. They only confirm established trends. Even with these drawbacks, moving averages are a powerful tool of technical analysis that can help you determine trends and identify buy and sell signals.
Okay, and that's it for the videos. Notice in that last one about moving average, it mentioned about that exponential or weighted moving average is much better for the short term. And hey, that's what we're trading on, is the short term right here. So that is what I'm showing you, is exponential or weighted. Now, I've got a bunch of photos of these, and I'm going to show you in real life what I've gone through and what I've seen with this, okay? So this is, okay, the top, okay, first of all, the red line is your 100 moving average, which means it's very far out. It's going to show you the basic moving averages, but not too closely. It'll show you trends, okay? The red line isn't as far out, and it kind of smooths out the trend, whereas that blue line is very close to what the trend is doing, and it follows it really closely. So what you're looking for is when they cross each other, when the orange and the blue lines cross each other, which is in the circle there, it's crossed each other, and see that blue line is still going down. That signals a sell, okay? And so you would sell there. And as you can see in this chart, although you can't see very much, it did start dropping right then. So that is when you would want to put in a sell. And that's strictly using moving average. Because really, down here where you've got that little blue line there, that's our relative strength index, and it's not really showing you anything. So in this case, the moving average showed something that the RSI did not. Now, notice that, okay, at the top, your moving average changed, and it's starting to tell you, and it's told you to sell. However, the relative strength index on the bottom, when it came up, it told you to buy. Well, which one's right? That is what you have to determine, because these aren't always both right. Sometimes neither of them are. So, you have to decide. So as it was here, the moving average was the one that you'd want to go by. But if you haven't got a clear signal from both, I'd probably just stay out of it and skip it. Now, here's showing where you have a moving average that the blue has crossed over the orange. So that's a clear sell. And then at the very bottom, when it went down to the very bottom, look at the RSI, the little blue line at the bottom there, where I've got the circle, and it went below the 30, and then it came back up. And right when it came back up, that's right when the candles started going up again too. So that would have been a great time to buy. So this is a way to use both of the moving average and the RSI, at the same time, because you can get different signals, but at different times, and some of them catch it, some of them don't. Again, never worry about this red line crossing any of the lines, because it's only used for our benefit to show the general trend of the market. Okay? Another picture. Okay, we can see that this market is trending downwards. You can just see that. So, really, when it had this crossover here at the top left, almost where the long arrow tail starts there, if you were to put a sell order in and you were to keep on going and going and going and going, well, then that's awesome. You would have done well. But how many of us looking at that jagged little line would really have realized that that was a sell, and to keep on with it? Because some of these sells are very quick and then you got to get out. Some of them are much longer lasting like this. So you have to be able to judge by looking at the charts. And the only way I did this was just by watching the charts. Now, you can see down here on the relative strength indicator, the RSI blue line here, it did dip below 30 and came back up, which would be a buy signal. And I did buy. And it kept on going down. So that's the limitations. Is they're not always right. And now, notice the RSI at the bottom where I've got a circle where it did dip down, then it came just above the 30 line, and then it just wiggled around there. It just kind of just up and down, up and down, up and down, right there. So that means that buy signal is not a clear buy signal. It may not be right at all when you don't see clear ups and downs, or downs and ups, whichever way you're looking at it. And if it just starts piffling along a line like that, then it's probably not done with the current trend at all. Okay, all kinds of circles and lines here. Okay, first of all, the first circle on the top left shows the orange and blue crossing over, signaling a buy. Well, if you had, you made a really short buy, you could have done it. Also, then you've got your RSI down at the bottom, the blue line. That blue line almost hit the 70, not quite, but that did show right away where the sell should be. And then notice the next circle on the moving average line, there it signaled a sell as well. However, the moving average line was not as quick on the jump as this one, as the RSI line was. It was kind of showing it after, but you still wouldn't have done poorly if you'd gone with it. So, and then actually, I wish I had my pen out. On the RSI line, there's a couple of dips in it. After that one up that I've got circled, you'll notice there's a couple dips in it. But it did show little dips in the line, but it wasn't enough for us to be able to put an actual buy in, because it's still just going downhill. So in addition to these oscillators, the RSI oscillator, you have to look at your chart as a whole. As a whole, is it going, is it trending down, or is it going up and down and up and down and up and down? And in those cases where it is going up and down a lot for great periods, a lot, then the RSI becomes a lot more useful, as does the moving average. Well, you see my opinion of this one. Okay, so you got two circles there. The top one there shows the blue line crossing over the orange line, which is a clear buy signal. And then the RSI line at the bottom, the blue one there, shows a clear sell signal. So in a case like this, I wouldn't do either. I would just leave it go, rather than taking a 50-50 guess. No, it's much better to use if they're not agreeing with each other, don't do anything. Doing nothing at least won't waste your money. Here I'm using the Demon Scalper, and that's provided by Funded Trader Trading Plus. I'll show you where to get that. It's wonderful. You would only put in anytime one sell or one buy using it, and you are risking 1% of your money. And the deal is, don't ever risk more than 1% of your money, okay? On any one trade. So these are to be put in one at a time and then closed out. So notice how that's trending down. That's my first arrow, that it is trending down. And then if you drop almost down from the nose of that first arrow, you'll see the green and orange lines crossing over, signaling a buy. And look what happened. It went straight up. And if you'd had that, if you sold earlier on, if you're having sells earlier on, and then you took that and you went for buy, you would have gone up and you would have made money. So it's always something to watch out for. And that's why I put the little check mark there, because that's exactly what you're looking for. And then you notice that the blue line, the RSI line, is just kind of squiggling along the top there. You may want to put in a buy and you may not too. In this case, it did actually work for me, but it may not always, because that is not what I would call a clear signal. However, the crossover with the moving average is pretty darn clear, and I can see that it is going up. So that's a definite buy right there. And as I said, with that blue line, not actually, well, it did cross once, but it didn't recross down to give us that sell signal yet. So remember, if the relative strength index line does not recross the 70 or the 30, then don't take a buy or a sell. Like it just crossing up into it, don't worry about it. Wait till it crosses back down over the 70 line, or if you're waiting for a buy and it's under 30, under 30, under 30, and then finally it crosses above, that may be a buy signal. Whereas, as I say, the top one, once it goes under 70, that's a sell signal. This is an interesting one. So, first of all, the first circle on the bottom of the RSI line. You can see that it peaked above the 70 and then it went down below the 70. And I'm sorry, I scribbled some things out there because I'm not a good drawer, in case you've not noticed that by now. So the RSI told us, okay, you should be selling now. Well, yeah, if we did right where the line comes up, we might have thought we were nuts, because it didn't show it right then. But if we'd have done okay, because it was trending down after that. So that's why the check mark, that it did work. Also, the next circle on the top on the moving average lines, you can see the blue cross the orange again. So that's a definite downward. That's a definite sell. So using both of these signals, you can see that it's a good time to sell. I like it when both of the signals are working together, and you can see that, because then it makes your predictions a whole lot more likely to happen. Okay, you can see where it says late entry on the E after the late, the E at the end of late, you can see a little a downward trend on the RSI line there, on the blue RSI line there, which would signal to sell. And then, and that would have been selling right at the top, so just to the left of that top circle. However, the blue and orange lines did not cross until much later. And then you did have a bit of a dump there where you could have sold. But if you didn't catch it at that bottom point, which is again shown on your RSI, although it didn't cross the 30, it almost bumped it. That's usually not enough for me to put in a sell at that, or a buy at that time. But in this case, it would have been. So as I say, it's still up to your eyes. And also you can see the two moving average lines at the same time that there was that low point in the RSI, they both started going up. So that was actually a pretty decent buy signal as far as I'm concerned. However, why I've got late entry there is because the RSI showed us far earlier where we should have started selling, and the crossover of the orange and blue was a late entry. It didn't show us anywhere close. Well, it was close, but it was late. Now, if you look at this chart, it's the orange and the blue on the moving average are crossing here, there, and everywhere, and pretty hard to keep track of. Very hard. But, so you have to use your own judgment. Near where the circle is on the moving average line, it showed that's a definite sell signal. And it did go down. However, on the RSI line at the bottom, the blue line, it really wasn't showing us anything, because you don't do anything if the line's just going squirrely in the middle like that. So there you only had one indicator. As it happened, the one indicator was good, but you never know. It may not be. These are not written in stone. Here I'm showing you a few different ones here. So on the first set, the RSI line on the bottom, it moved up and then it went back down past the 70. If at that point we had sold, we'd have been good. And again, this gave us the indicator when it would have been really high. So if we sold then, it would have been lovely. However, in the moving average, the crossover between the blue and the orange gave us a very late entry. Now, if we'd sold right at the bottom, where, again, the RSI line in the second circle, right in the middle there, it shows it almost hitting the 30. And we see that the chart above, it also goes down. It's also down, but there's no crossover to show it on the moving average. However, using just the RSI, it did go back up. But then it crossed over right away again and started going down. So this is overall a downward trending market. And then the third one there at the bottom shows again where the RSI touched the 30 line, which would have been a good time to buy. However, I don't know how this ended up. And did it just keep on like going up and then further down, up and then further down, up further down, you know, and being a then being a downtrending? I don't remember. But I do remember making a bit of money when it went up. Okay, so this is perfect. This is a perfect look at the RSI line. The RSI line, the blue one at the bottom, it hit 30, and at the same time, you had this massive low. So when it hit 30 and it bounced back up, that was a buy signal, and you would have done well. And so that would have been good. This I am just showing as a trend, okay? Now you can see I've got little numbers beside the circles. So on the top you see 1, 2, and 3. Notice that each time it goes up, it's going up to a lesser value. So the first one went up to a fairly high value, then it dropped down, then it came back up, but not as high as the next value. Then it went back down, and again it came up almost to the same value, but not quite. Now look at the lows. The first low is quite low. The second low, or number 5 here. So number 4 was quite low. 5 was even lower, and 6 was even lower than that. That shows a downward trending market, no matter what the lines tell you, and really the green and orange lines do tell you a bit of a story, but that is overall a downward trending market. And if you find yourself in that, you could just, when it is up, put in a sell and then ride it down, see if that works. As I said, no guarantees. And at the end of that arrow at the bottom there, right where the tail of the arrow meets the arrow part, it does show a buy signal off of number 6. Now that might be good, but usually I like to see it cross over the 30 line, and then as it comes back up and crosses over the 30 line, use that as a buy, because if it just touches, it may not be accurate. You know, hell, they may not be accurate anytime, but that, I would really shudder. This is my hometown, and this is the ferry to get on it because I live on an island. Next. There we go. Okay, so moving average line, we see a definite crossover here between the orange and the blue, which definitely tells us to buy. And if we'd done that, we'd have made a bit of money. Now, the next circle and arrow shows, notice the RSI. It's just kind of piddling along that 70 line, so we don't know really what it's going to do, and I wouldn't be using it right now for any kind of massive changes, because I wouldn't trust it. However, we can see that on the third circle, on the moving average lines, they did cross again, and that was a definite sell. It was showing you a sell. You should put in a sell. So that's how to read these, and when not to really pay attention to one or the other. Because again, the moving average lines can be very close together as well. And in that case, I don't trust them at all. So here's where I'm showing you, right underneath where it says B for buy. It's showing you the moving average lines, which cross and cross and cross. And really, it's just dribbling along there. And there's no way, when it's under super consolidation like that, there's no way you could predict where it's going. Now, as it happened, that last crossover of the orange and blue, yes, if you'd have bought, you'd have made good money. But then again, below it, on the RSI line, it was giving you a very clear sell. So what do? That's why the question mark. What do? You don't do anything. You wait till the next signal. Don't be too Johnny on the spot in doing these buys and sells, or else you will not do them right. And if the signals are not clear, just don't. So here's another example of one of those moving average lines that are like just crossing and doing nothing. And the crossover that showed it going down even at the end, no, it's not big enough. It's just not, it's not good enough. So I wouldn't put any store by that at all, and I would not trade on it, which is why I put no at the bottom. Don't trade. Now, here we're going to look at volume as well. See where that middle oval is, the bigger one? It's on my volume lines. Volume lines. When the volume is low, you're not going to see much action on your chart. And that's when I call it super consolidated, because it's really not going anywhere. It's going straight sideways. So low volume means not much action on the chart. And then we had a minor crossover line here that would have shown a sell, but really it was still going too close together. I wasn't happy with it, so I didn't go with that one. However, on that third circle on the moving average was a big crossover, and it, like, the two lines really separated there, and so I definitely would have bought there. And then when the RSI line showed a sell position, I may have sold right there too. So there are ways you can use these together, and times when you use them together to say no. Now, here on the RSI line, you can see where it went above the 70, and then as it goes below the 70, you should have put in a sell order. However, you'd have to be right on top of, like, right where that line peaked, right under the info button, and then you'd have had to have gone then and then sell. However, even at the late entry, which is why it's circled late, you would have still been able to make some money, but it would have been a whole lot more. And then it just kind of jiggled. And that's what you see on the RSI line at the bottom, the blue. You see where I went from that circle where it told you to buy, and then I just went straight across, because really there's nothing happening. It's just wiggling around in the middle, and in that case you do nothing. And notice this went from 4:22 on the server's clock to 5:34 on the server's clock. That's over an hour where it didn't do anything. So unless you want to spend hours and hours and hours watching this, you might want to just dip in and out once in a while and see if you can get a trade in, and then go the other, and then go to sleep or whatever you have to do. So that's showing you how long this can kind of take. However, I would highly recommend just sitting back with your indicators on and watching the market for a while. Do it maybe even more than one night, because you know how Mondays can compare to Fridays, right? They're horribly different. So you should see this over different days as to how they react. Now, okay, so the first circle on the left is your moving average, which signaled you to sell. Kind of a late signal though. Really, it was already where it should have sold. So you could have put a sell there, but you probably wouldn't have got much. If you'd put a sell there and then, got out of it right at the bottom of that blue line there before the next circle, you'd have done okay, but you'd have to have been pretty quick. So, not so good. However, this next one is good. The lines separate nicely and they go up, 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 up. So that would have been an excellent buy place. And then the third circle, you see it crosses and it goes down a bit. And then the fourth circle is where it comes up again. Where it goes down a bit on the third circle, again, if you caught it really fast, you might be able to make a little money, but no, not really. That might have been, a false signal. Whereas on the fourth one, where it showed really good pretty good separation, you could have made some money on that. Also notice that the RSI line also was going up at the same time, showing that, it went up and then it nearly touched and went down, which to me would be a sell signal. And you can see the moving average lines at the very end there are starting to show a sell, may cross over, so it may show a sell signal, but it's far later than the RSI did. Now, here we can see a definite downward trend. I don't think anybody has any questions about that. So on my moving average here, where I circled it at the top here, moving average, it was showing down. So if we'd put a sell in here and just wrote it down, it would have been great, you know, if we could have seen to do that. However, we had these little dips happening as well. And you'll notice that they are registering on the RSI line, these little dips. So I guess if you were really fast, you could have put in buys there and then come up a little bit, sell. You know, buy, come up a little bit, sell. But most people don't like to do that. Most would like to hit the major trend line, and that's what I prefer to do as well. Oh, by the way, this is another picture of our ferry, and in the back is a sailing ship called the Blue Nose. It's one of the most, it's a huge deal in sailing ships in Canada. Anyways, that's all for the pictures. Sorry about that, going off topic with the ferries and where I live. So, as I read before, the shorter the time span used to create the average, the more sensitive it will be to price changes. So the blue line is the one that is the shorter time span. And so, yeah, it's really showing the changes. And the longer the time span, the less sensitive the average will be. So the orange line is somewhat less sensitive, and the red line is very much less sensitive. The red line shows you major trends, but it won't be as sensitive as the other two lines. So you don't use the red line to say, hey, I should buy or sell now. No, just use the orange and blue lines, and of course your RSI line, and also pay attention to your volumes. Okay. So now I would like to show you how to actually set this up. So let's just go into here. Okay. I wanted to go here actually. Oopsie. Just wait. I'm sorry. Okay, so I'm going over to a whole new chart here. It's a brand new chart. I do have it set to gold, but that's all I've got it set to. So let's see how I normally set these up. First of all, we're going to hit minute 1 so that it's on the 1 minute. Hit minute 1. Okay. Either double click on here, or if you're on an iPad or iPad, you just click and hold. Come on, do it for me again. There. And here where it says grid, click on that, and it'll get rid of all those annoying grid lines. Oh, lovely. I'm sorry. I'm doing a bit of trading in the background here. And then here, also under here, oh, come on. There. We have volumes. Yes, we want volumes right there. And that shows us the volumes. Now, look at how much volume there was earlier on in this chart. And you could see how it's really making the moves up and down and up and down and everywhere. And then as the volumes decrease, you're seeing a whole lot less action. And it's going more and more and more into consolidation until it's practically nothing consolidation. Now, what I like to do up here is to push the candle button so that it's showing me candles. And since I can't see the candles, I need to zoom in using the zoom buttons. There, now I can see the candles. I also like to push this little red arrow button here that's fourth from the very end on the right. This red button, yeah, this red button. And this will just back it off a little from the right-hand side, and I find it easier to read then. So that's how you do that. So our volumes are in there, but nothing else, okay? So let's put in our RSI. So we're going to do Insert, Indicators, Custom, and then at the very bottom, or third from the bottom, is RSI. Don't do anything with this. Okay. And there you've got your RSI line now in there. Now, what about your moving averages? Please note that in the notes on this, in the directions that I've got here on the side there, or the description, I've got your moving average time span settings so that you will know how to set them up. So again, we go Insert, indicators, custom, and then custom moving averages right in the middle here. Okay, now this is where we have to start prettying things up. Under 13, we're going to first of all put in our major moving average, that big red line, and we want it out as far as possible to 100. That's our time frame. We don't want simple, we want exponential. If it'll do it for me. There we go, exponential. Or you could do linear weighted. I do exponential. And that will make it more sensitive to the price changes and is better for the shorter time span. Okay. However, with the red one, it's not that important. Now, colors, yeah, you want it red. And if you want to be able to see it, I would change the width to 2. And okay. There. Now we have our major moving average. Our major moving average there. So now we're going to need to put in 2 more of them. Insert, indicators, custom moving averages. Tonk. Our inputs. Our next moving average time for sky blue should be 12. Okay, so we'll put, and these are all in the description, so we're going to put 12 here. As if this will work for me. There we go. 12, return, and then not simple, but rather exponential. Almost at it. There we go. Exponential. Colors, we want the sky blue. So under red, we will change that to, where's my sky blue? Right here. Deep sky blue. And again, unless you want the line to be really, really thin, like the RSI line, you want to put 2 on here to make it so you can see it. There's your blue line. Now, want to do our third line. How do we do it? Insert. Come on, insert, indicators, custom moving average. Now, as shown in the description, the orange line is to be set at the time period of 26. Let's get in there. Okay, good. And we'll just go 26. Enter. And we don't want simple as usual. We want to set that to exponential. Okay. The color on this one is going to be that orange color. Just right here. Dark orange, yeah. Thicken up that line to, okay. And there we go. There's our moving average lines. And our volume lines down below. And our RSI line. And there it's all set up. Now, one thing I would highly recommend that you do, get rid of that one there. One thing I would really highly recommend that you do is like when you're first looking at the chart, when you're like, just opening it up, just check how it's going. Never use just the 1 minute. Never, ever, ever. Just go out and just check and see what the 5 minutes doing. Well, and here we can see that it's really going into consolidation. So in our minute 1, we just go back to minute 1. Kind of looked like it was kind of trending down, but then we go to 5 minute. No, it's pretty much absolutely flat and in super consolidation. 15 minute, you can also check. Well, that showed the beforehand where we had those massive moves. And then, yeah, it's just dribbling right down into consolidation and going completely sideways. So this is the time to just let your EA do its thing, Then you just put your EA on there like you normally would. And by the way, the whole time you're doing this, make sure your EA is on, attached to chart, and then load up your settings. Oopsie. Oh, for crying out loud. Sorry about that. Okay, so we'll go here. Oh, no. Up here. Save. Okay. Okay, now I'm doing this on a Saturday, so you're not going to see any movement. Whatever. But you should have that on your chart so that it's always there. And then when you're going to do, when you're going to put in a special buy or sell, a manual, go to your demon scalper, which is on the side here, attach it to the chart. Yes. Don't do anything to it, just go okay. And you've got your demon scalper. Notice it shows risk being 1%, and then you can sell or buy. Again, where it's just dribbling around along the center here, it's going sideways. I would not do a buy or sell, but say there was an opportunity and you wanted to do one. Then you could put in a buy or sell. I don't like putting in these lines, but anyways, there you go. Also, if you're not happy with spending 1% of your, which is, I know on my $100,000, it was around a 5-lot purchase or sell, which seems to be a lot. You can always put that to, 0.5 or whatever you want it to be, really. But you do want it to be a substantial lot because it's not what your EA is doing. It's a special thing that you're putting in. Okay? Now I'm just going to go back to the EA to get that off my screen mainly. Yes. Okay. And you're going to have to get used to doing that because once you put in a buy or a sell through the demon scalper, then you are going to want to change it back and put the EA back on so the EA can keep doing what it's doing in the background. And then when you have something that you've just made a good profit doing something you've done with the scalping tool, then you want to, get rid of the trade. You want to cash out on it. Then you could do that just with that one trade, which is awesome. So where do you get the demon scalping tool? Well, we're going to go over here to Funded Trading Plus, and this is their FAQ page. Okay. So it looks like this, and everybody, when I send them here, says, I can't find anything about the demon scalper. Okay, fourth here from the bottom of this last lot, where can I download the demon scalper EA? Hit your plus. There's one for MT4. There's one here for MT5. We would be using the MT5. And then there's a video on how to use it. And it goes into both the functions I was telling you about and some more advanced functions as well. So this is where you can download that. They also have their own risk manager EA. I've never used it, but hey, it might be worth giving a go. You never know. But our EA, like the Pasture Challenge EA, it does have that risk manager in there. So I'm not sure that I would actually use that. Oopsie. Oh, thanks a lot. Okay. So, yeah. So you've got RSI, you've got moving average, and you have your volume lines. In the description, there's also, so in the description, it briefly tells you what RSI is, what moving average is. It doesn't really go into volumes, but you can get the idea of the volume, the number of trades that are going through. And so that you should really, really watch those two videos. And I hope I've done a good enough explanation. Elsewise, get back to me or put it in the comments. Do you know what? All these videos of mine are private. So if you don't have the link that I give you, you can't get into it. It's not searchable on YouTube. So you can put even questions and comments right here in YouTube and it's fine. I'll see them and I'll get back to you. Or you can just DM me on Discord, whatever you feel like. It doesn't matter to me. So there you go. Did I cover everything? Yes, I believe I did. Okay, so I don't need to gold minute one charts set up here. I'm just going to close out of this. Good. And now you can see I'm on the BTC chart. So you have to get really good at running between your prop firm EA right here and your demon scalper and becoming really quick on it, or else you'll miss chances. Yeah. And notice even here, this is the tail end of Friday, by the way, And you'll notice here where the RSI line goes at the very the right-hand side, it goes under that 30 mark and then it comes back up. And I could have bought there, but I also knew I was about 20 minutes away from the end of Friday, so I didn't. But had I could have made a few bucks there. I was just playing it safe. Playing it safe is always a good idea. It's better to be safe than sorry, like your mom probably told you. So, try your best to use, both of the methods I showed you, hopefully both in conjunction, but don't rely on them. Also look at what the chart itself is doing. These are not 100% reliable. So have your EA on and use your indicators. That's it. That's all. If you got any questions, let me know. Or if you disagree with me, let me know. Got suggestions? Let me know. And we'll get these all out there. Thanks a bunch, and you have a great day.